In this brief, we offer a discussion on a practical method of how asset allocation can be used to satisfy an investor's desire for stability and opportunity within an investment portfolio. It is our objective to create a solid basis for understanding changes in allocations when considering objectives, risks, and market characteristics. The brief starts with a global view and then continues to refine the focus until the allocation is centered exclusively on domestic sectors. Asset allocation alternatives are displayed in a master table. Each section of the master table addresses asset allocation starting with cash, bonds, sometimes referred to as debt investment, and stocks, also referred to as an equity investment. Bonds are further segmented into 8 additional asset areas, starting with U.S. government bonds and covering both domestic and foreign markets. Stocks are segmented into 2 major categories, domestic and international. If the home market is large enough, domestic is further segmented into large, mid, and small capitalization areas. The large cap area is further segmented into 10 sectors that focus on specific parts of the market. This starts with consumer-based sectors and continues on to cover telecommunications and utilities. International allocations are segmented into 7 major regional or specific country markets. Since China is a separately identified market, it is not duplicated in the allocation to emerging markets. Asset allocation values are provided in 6 columns of the master table. It all begins in column 4 by establishing market value weights. Each of the values starts with a completely inclusive market capitalization weight that we have identified as market neutral. If there were no over or undervalued positions in the world's stock markets, market neutral would match each market's respective market capitalization weight. Since the occurrence of a pure global market neutral position is rare, each of the allocations in the table reflects the market capitalization weight adjusted for the market's relative valuation. Across columns 5 through 9 are allocations that represent the trade-off between stability and future opportunity. The 2 ends of the spectrum are an increase in stability valuations in portfolio values over time versus higher fluctuations in values over time, but greater potential in future value. Neither end of the spectrum in our asset allocation is to the extreme of absolute stability, 0 variation, or wild swings in pricing levels. The stable side is not exclusively cash, and the opportunity side is not all private equity. The allocation adjustments are gradually tilted with the allocation left or right, up or down, to increase stability or increase future potential. Investment Strategy Network's global asset allocation is the broadest view of the world's markets. It includes every major part of the reasonably obtainable market universe. By reasonably obtainable, we mean that which is available to all investors without using special securities, contracts, or structures. Many investors wish to examine the asset allocation decision in terms of a home market or currency. This section of the asset allocation creates a domestic view. Using the U.S. as an example, the stock allocation has shifted heavily to the U.S. market, while foreign markets are removed. The same can be done for other major markets. Additionally, many investors do not require or desire stability protection. Other investors may not wish to give up long-term opportunity for stability and seek a higher long-term investment potential. In this case, we eliminate debt obligations from the portfolio and focus on stock-based securities. The allocation can also take into account specific industry concentrations and neutralize the concentration. Consideration can be given to market relative valuations, rankings, and expectations on a global, regional, individual country, sector, industry, and stock basis. For more information about Investment Strategy Network, visit us at investment-strategy.net.